On the domestic front, company news is scheduled to be thin on the ground as we come out of the Easter holiday. The Financial Conduct Authority has lifted its moratorium on the publication of preliminary results statements, but the regulator is still giving companies an extra 2 months in which to release their figures. As a result, any timetable for company results releases is now provisional at best. We may still get some unscheduled updates, but on the short, scheduled list, the main name of note would have been fashion retailer JD Sports on Wednesday the 15th of April. But, alongside a Covid-19 update in late March, the company announced it would probably delay publication until mid to late May. As a result, macroeconomic data and the coronavirus outbreak will continue to dominate market attentions. Investors are looking for signs that countries are what's known as flattening the curve and seeing a drop in the number of new cases and fatalities, for humanitarian reasons, as well as no doubt more selfish financial ones. Suggestions that Austria and Denmark may be the first European countries to start easing their lockdowns are stirring some optimism in stock markets. So let us see how Vienna's Chancellor Sebastian Kurz and Copenhagen's Prime Minister Mette Frederiksen proceed, as their policies could perhaps become templates elsewhere. Note also that the Italian stock market, as benchmarked by the MIB 30 index, actually bottomed on the 12th of March and has quietly advanced by nearly a fifth since then. That could be a sign that markets are recovering their nerve and seeing grounds for optimism, although we still don't know that we will get a V, W, U, L or bathtub-shaped recovery as and when we start to get through the worst of the viral outbreak. This is why the next batch of Chinese economic data will be particularly closely watched, although whether you think the numbers are entirely reliable is something that only you can decide. On Friday the 17th of April, China will publish its GDP growth figure for the first quarter of 2020. Now, the world's second largest economy is clearly going to miss its target of growth in the region of 6%. Economists will be looking to the degree of the drop to see if this offers any guide as to what may happen in the West in Q2 and beyond. The problem with GDP figures is that by nature they're backward-looking, so a further data set from China on the same date, Friday the 17th, may offer something a little more timely. Beijing will publish year-on-year growth figures for investment in fixed assets, retail sales and industrial production. And to give you an idea of what's happened so far in February, well, fixed asset investment fell by nearly 25% year-on-year, retail sales by just over 20% and industrial production fell 13.5%. Grim as they are, the good news is these numbers are all history. Markets will be looking to see if the March number showed any tentative improvement as China began to emerge from its lockdown. There are two other sets of macro data which will be closely followed in the coming week. The first are two of the latest economic sentiment surveys from local branches of the US Federal Reserve. In this case, the Empire State Manufacturing Survey from New York on Wednesday the 15th of April, and then the Philadelphia Federal Reserve Survey on the 16th. It won't surprise you in the least to know that the latest reading showed a collapse. In March, the Empire State Current Business Conditions Survey fell to minus 21.5 from plus 12.9, while the equivalent score from the Philly Fed hit minus 12.7, down from plus 36.7 in the previous month. Note that the all-time scores on these surveys are minus 34.3 from Empire State, that was in February 2009, and minus 40.9 from Philadelphia in November 2008. The other stat that's likely to grab a lot of headlines in the latest US is the latest US weekly unemployment insurance claims figure. That's due on Thursday the 16th of April. The figures for the last 2 weeks have been frankly frightening, with 3.3 million and then 6.6 million claims. The latter was the highest figure in the entire history of the series. That suggests that pretty much 10 million Americans have lost their jobs in the space of a fortnight. Given a US labour force of 165 million, that alone is enough to take the unemployment rate from its 50-year lows of below 4% to around 10%, with the prospect of more to come. Let's see how the latest weekly claims number looks, but it could be grim, given that the US system is likely to be overwhelmed by new claimants and it could just take time for them to get through and register. Hopefully, for the sake of those involved, the number of new claims will start to ease, and economists and investors alike will assess the data to see how it fits with the V-shaped economic recovery scenario which stock markets have started to price into share valuations during the run-up to the Easter break. Thank you for watching. I hope you and your families are all keeping well during these difficult times, and I look forward to talking to you again next week.